My main things are first, um, cash is trash, um, and that there's in bonds and debt, it's not going to be good, and the claims of financial assets. So either avoid those or position yourselves so that when those things operate and position yourself for inflation. So there are investments, lots of investments pertaining to inflation. I agree with Jeremy's comments about commodities, and the big commodity cycles are reactive. There's a giant, just like the 40-year bull market in bonds, associates with a commodity cycle where everybody adapts to that. Companies don't hedge. Inventories are drawn down. There's less investment in those things. That when that switches to that kind of an environment. And the big overarching thing is that the amount of financial claims that exist, and there's charts in my that I repeatedly show when I deal with the changing world order. What is the amount of financial claims, assets, relative to real assets? And you could see that through history, when those financial claims, it's like a bank has too many IOUs on its real money and that thing, then you always get into these environments where it's undesirable to own the debt and you have negative real returns. And so to position one's portfolio in a tilt that way. But of course, the way that we do it is to separate alpha and beta, right? So two parts, core, because we're all talking tactical. How do you create a truly well-balanced core portfolio? And we know that the typical well portfolio is not well balanced, with its greatest vulnerability being in that upper right quadrant in our box, which is the inflation box. And we know that we're in that environment. So from a starting point of view, I would encourage all investors to look at that box, those four quadrant box, that box that we have: rising inflation, falling inflation, rising real growth relative to discounted, falling real growth relative to discounted, and see what the biases are in those portfolios. I believe that now you can simultaneously reduce risk and raise returns. Reduce risk of that portfolio by having more in that upper right quadrant, rising inflation, and you will reduce your risk, because if you look at your portfolio, typical investor's portfolio, that is the environment that it is missing. So you start with that. How do you get more neutral? How do you get better balanced? And you cover yourself from that exposure. And then you make your tactical moves around it. And the tactical moves, again, should not be in those debts. It should be very well diversified. I think that the social and political conflicts are going to be a big investment thing coming forward. And so that'll mean, and the way I look at it is, I want to look at places that have good income statements and balance sheets. So when I say places, I mean countries, as well as individuals that make up those countries, the individual people and the individual companies. So do they have a good income statement, financial stability? Do they have a good balance sheet so that they can weather those things? And also, it's a sign of their productivity. Are they productive? And then number two, are they civil with each other? I really do believe that internal conflict and bad finances are going to be defining characteristics of where to invest or even where to be. And then if I carry that forward to the third, am I going to have in the risk of being in a international war, an important international war? Because that international war will raise lots of threats. So I want, when I'm picking those locations, I want to be out of those debt instruments, largely minimized on the financials, the inflation hedge assets, well diversified. Look to parts of the world that are not as plagued with this. So emerging Asia is very interesting. India is interesting. So diversify. Look at neutral countries during that period of time. Watch out for government controls on capital markets, because that's the logical next step. History has shown that. Watch out for foreign exchange controls, could be. Watch out for those things. So those are the themes that I think are most important and will be most important in investing.